Hey everyone, Steve here, the Seller CPA, your e-commerce CPA. If you don't know me, I'm a CPA that works exclusively with e-commerce founders, helping them with their monthly accounting and their income tax preparation. In today's video, I'm going to show you exactly how to prepare your income tax return if you're a single member LLC or a sole proprietorship selling on Amazon.com using FreeTaxUSA.com. I'm going to tell you exactly what reports to pull and what numbers to put on what line items. So by the end of it, you should be able to prepare your tax return in FreeTaxUSA.com. But when you finish this video, check the link in the description because I've added some additional information that shows Amazon sellers how to save on average $15,000 or more per year on income taxes. Now let's get started. So the first thing that you're going to need to do is have access to your Amazon Seller Central account to pull certain reports. You're going to need information about your inventory purchases that you made during the year, and you're also going to need information on your expenses that you paid during the year. So gather that information and let's get right into it. And when you're in Seller Central, you need to go to your reports repository. So once you get to your reports repository, you'll select account type all, and then report type summary, and then custom date range, and then select the date range for the tax return year you're gonna go ahead and file. So I've selected a full calendar year, and then I clicked request report, and then the report was available here as a downloadable PDF. This is what the report looks like once you download it. So keep this handy and I'll show you where to enter the numbers from this report into FreeTaxUSA. Once you go to FreeTaxUSA, you're gonna have to enter some personal information when you start, but that's beyond the scope of this video. But if you have personal information that you need to enter, you'll do that then, and then you'll have common income, which is listed here, and you'll enter any of those things. But the scope of this video is going to include just the Schedule C, which is in the business and rental income section. When you're in this section, you'll see this Form 1099-K income, and if you received a 1099-K from Amazon, you're obviously going to want to click Start and then click into it, and it's just going to tell you who sent you a 1099-K, Amazon, and then you click that. And then you say, is the 1099 correct? Usually it's yes, it is correct. So you click no, we didn't receive one, that's incorrect. Then you click save and continue, and it just tells you that you should report this income on Schedule C, of course. So you click continue, and this is where the Schedule C exists. So this is where you're going to be entering your business income and expenses. So let's go ahead and get started here. It says add a business. So we'll go ahead and add a business. And it says, what type of work do you do for your small business? So what you're going to want to do is enter what you do, and that is you're an Amazon seller. In this next section, it's going to ask you if you have a name of the business. So this would be applicable if you have an LLC or a doing business as name. But if you're a sole proprietorship doing business in your own name, this is not applicable and this is optional. This just shows up as a separate line on your Schedule C with your business name. So which code fits your business? None of these are likely to fit your business that it's suggesting. So you can click none of these fit my business, and then you can look at this drop-down menu, and yours would be on retail. If you're just doing general arbitrage, it would be retail, miscellaneous retailers. But if you're more in a specific category like sporting goods, you can select that, and then you can click there. But if you wanted to just keep it as miscellaneous retailers, you can do that and all other miscellaneous retailers and click save. Keep in mind that none of the selections on here, except for this one, are going to have any bearing on the numbers on your tax return or how the tax is calculated. Does your business have an EIN? If you have one, enter it here. If you're doing business as yourself with your social security number and no business name, then you wouldn't have one. I'm not going to enter one here now because it's going to say it's invalid if I make one up. Does your business have a different business address than your home address? If it does, you'll enter it there. It'll show up on the Schedule C as the business address. And did you start or acquire this business in 2024? So that just checks a box whether it's the first Schedule C filed or not. Did you make any payments that would require filing Forms 1099? This just means if you paid independent contractors, for example, or somebody that needed to receive a 1099, yes or no, did you file those? Again, that's beyond the scope of this video, but if you did file them, then click yes. And if no, then no. That'll just show up as a checkbox on the return. And does your business have inventory of cost of goods sold? That's definitely a yes checkbox that you need to do. Now, your accounting method for your business, this is very important because it determines how you are reporting the information, and how you're reporting the information here should match how it's reported on the books. So let me explain the three different options. Cash is like it sounds. You only report what you receive and what you pay out. So when you get money, that's reported as income. And when you pay expenses, that's reported as expenses. Accrual basis probably is not something that's going to fit if you're a very small seller just starting out. But what accrual means is that you recognize income when it's earned, and you recognize expenses when they're incurred, whether they're paid or not. Other is a category where it's a combination of the two. So in this lesson, I'm going to show you how to do what's called modified cash basis. And this is pretty common for small Amazon sellers. So click Other and then click Save and Continue. So now it's going to ask you, what accounting method did you use as an Amazon seller? And I'm just going to say modified cash basis, and then click Save and Continue. So what is modified cash basis? Is essentially just reporting your income and your cost of goods sold on an accrual basis, and reporting everything else on a cash basis in terms of expenses. Did you receive a 1099 NEC or 1099 MISC? Most likely not. Did you receive 1099K reporting income for this business? And the answer is yes, but once you click that button, it's going to give you some additional information here. It's also going to ask you a question here. So I usually just click no, because there is some information here that makes the whole thing kind of confusing. So just click no, and then you're going to enter the total amounts of gross receipts or sales that were not reported to you on a 1099 NEC or 1099 MISC. That's where this summary report comes into play. So we want to look at these numbers. Now this is the income section, this is the expenses section. So this shows the total income that you received minus the returns and allowances, and then minus your fees here. So for the purposes of this first number, we want to grab this one here, which is the total credits column, and go back and paste it right in there, okay? Now for returns and allowances, we're going to want to go ahead and grab this number here, copy that, and go ahead and paste it right in here. And then you can skip the miscellaneous income section because that's not likely applicable. So you can click Save and Continue. Now this section is super important, inventory and cost of goods sold, because this is where you're going to be deducting your inventory through cost of goods sold. And it asks you a couple key things that are very important. Do you have a beginning inventory value? Do you have an ending inventory value? And what were your purchases? So how it's going to calculate cost of goods sold is your beginning inventory value plus your purchases equals your available for sale inventory minus your ending inventory value gives you cost of goods sold for the year. So this is inventory and cost of goods sold done on an accrual basis rather than a pure cash basis, which is why I recommend doing the modified cash basis. Now, are you allowed to deduct every inventory purchase when you make it, regardless of whether it was sold or not? Well, according to the Tax Cuts and Jobs Act of 2017, the TCJA, it does allow you to enter all of your purchases and deduct them if you're reporting on a pure cash basis. But why I don't recommend doing that is because your tax return needs to line up with your books. And if you're reporting all cost of goods sold on a cash basis on your books, it's totally going to skew your gross profits, and you're not going to get good comparable gross profit margins month over month, and it's going to be very hard to tell how your business is actually doing. So that's why I don't recommend that method unless for some reason you don't need good financial reporting and you don't plan to improve your financial reporting and grow your business over time. Then sure, report all your cost of goods sold when you made the purchases of inventory. And this was only something that I would recommend for very small sellers that really are not planning on growing this into a real business, and it was more just like a side hustle hobby for the year. So beginning inventory, if you started with zero inventory because you just started the business this year, you can enter zero. But if you had a beginning inventory value, you can enter whatever that was. Now, how do you come up with this number? Well, you'd need to know what you had in stock at that point and what the unit cost of each item was. And it's just the unit cost of the item, of what you paid for it, not what it's selling for, but what you paid for it, times the number on hand. Now, if you can calculate that number, good. If you are past the point where you didn't know what your count is, you can do an estimate. The IRS does allow estimates, but for purposes of this video, we'll just put zero, assuming the business was formed this year. Enter the total purchases. Now, this is something that you should be able to calculate by going back through your bank records. And if you go back through your bank records, you can identify all your purchases and add those up. Let's just say for this case, it was $50,000, and then you enter your ending inventory value. That's why it's important to always get a year-end inventory value count. Let's say it was $5,000. Okay, so now your cost of goods sold deduction is going to be 0 plus 50 is available for sale, 50,000 during the year minus ending, meaning your deduction is going to be 45,000. But in the cost of goods sold section, I enter some additional information, which is your Amazon fees, and that's going to go here. So let's go back to this report and look at this expenses section. Now, there is a cost of advertising in here, and if you do see the cost of advertising here because you have that deducted from your settlements rather than paying the credit card, then you'll want to deduct that from this total number. Otherwise, you can just grab this total number because there's no advertising here and enter this in the other costs. So this is all your Amazon fees. So now we'll click save and continue. Oops, I forgot to enter the ending inventory value method, which would be cost. So essentially you're valuing your inventory at what you paid for it. Click save and continue. Okay. Now at this point, we've entered our total income and our total cost of goods sold on an accrual basis. Why did I say accrual basis? Because the amount of transfers that were received from this income might be different than the actual income recognized for the year. So some people will say, well, I don't have all the money that Amazon owes me because they're holding money and I haven't gotten it paid out. Well, if you don't report on an accrual basis and you report on a cash basis, making an adjustment for the amount that you didn't receive, well, that amount will have to be recognized in the future years on your tax return. So you're going to make your reporting more complicated. And if you're scaling your business for success and growing, you're eventually going to want to be reporting on a full accrual basis. So you might as well start doing inventory and cost of goods sold and sales on an accrual basis now. Again, unless you're a very small seller that's not planning on growing their business. So let's pause right there before we go into the expenses section and just go back to the income section here. And we can see that we've added all this information and it shows gross income. And now it shows a form download option. So we can see what we've done so far. And this is what I really like over TurboTax, because you're able to enter information here and preview these forms pretty easily without going through a workflow that makes it confusing. So let's go ahead and click View the Form. And now it's going to show you a review copy of your Schedule C. So let's take a look at this form here. So you have the name of the proprietor, that's me, and the name of the business profession. If I had a business name and a separate business address, it would be shown here. Here's a made-up social security number and the NAICS code, which is the industry classification code we picked. And if we had an EIN, it would be here. And then under accounting method, you could see other, modified cash basis. Did you materially participate? That's always going to be yes if you're running the business. And then if you acquired or started the business in 2024, if I checked that, it would be checked here. And then here's the question about whether I filed 1099s. And this by default is no, that I wasn't required to file any 1099s. But now we can see the income section is completed. So we have my total gross receipts from Amazon plus your returns and allowances, and that results in your line 3 value. Then you deduct your cost of goods sold, giving you your gross income. And if you want to see the detail behind the cost of goods sold, you'll see that here. We reported cost, beginning inventory was 0, $50,000 in purchases, other costs, which was the Amazon fees, and then the inventory at the end of the year, giving us total cost of goods sold of $74,287. Okay, so from this number, we then have to enter all our other expenses, which will result in a net profit. Right now it's showing our net profit at $78.33, which would be the amount that is subject to self-employment tax and regular income taxation. But now we have to calculate the rest of our expenses. So let's go ahead and do that. So we can go ahead and click Edit here. And we'll just continue through the same workflow that we already continued. And now it's going to ask us to enter other expenses. So what should you enter here? I'm not going to get into too much detail, but expenses that are deductible are those things that are ordinary and necessary to run your business. So things like supplies are certainly necessary to run your business, and that's very common. So let's say you spent $500 on supplies. Let's say you spent some money on advertising that wasn't included on that settlement statement. Office expense. So you're not going to enter anything for like business use of home here. This office expense number is simply going to be a number that you enter for like office type supplies, printing ink, that kind of stuff. Whereas supplies here, it might be like packing materials. But ultimately the expenses that get entered here are all deductible. So it doesn't make a whole lot of difference which line item you enter supplies, for example. So let's go ahead and then enter a few more here. So legal and professional services, let's say you consulted with a professional for something. Let's say you paid for a general liability insurance policy, for example. Okay. Now it's going to ask you other questions about business meals. Business meals is an important and common one. And if you do have any business meals, you'd click yes and enter that. The thing about business meals is feeding yourself while you're working is not a business meal deduction. This is in regards to whether you are working with other employees or a client and having meals and discussing business. And for audit purposes, you're supposed to keep track of this. Did you elect to use the de minimis safe harbor for tangible property? So for example, if you bought a laptop that was less than $2,500, you can just expense it under the de minimis rule, which requires you to depreciate it if you don't. So this is an easy way to deduct equipment. And then you'll have other miscellaneous expenses, and this is where you would just enter any other expenses that don't fit those pre-set categories. So for one good example is subscription software. Let's say you spent $500 on that, and then let's click Save and Continue. So now you can go ahead and look at this overview, and there's going to be a lot of other categories here that are outside the scope of this video, but are nonetheless important. For example, if you are using a vehicle for your business, if you are using health insurance as a self-employed individual, if you are running the business out of your home, if you are having depreciable assets, which means you bought equipment, for example, that was over $2,500, and if you want to get the qualified business income deduction, those are just a few examples. So now you can go ahead and click View on your Schedule C, and that same report that we previously viewed has all our other expenses added. So deducting from the 7833 is our advertising, our insurance, our supplies, and then other expenses, which are all itemized down here, software, for example, and then it's deducted the total expenses from the gross income to give you your tentative net profit or loss. That is how to complete your Schedule C in FreeTaxUSA.com. If you want more detailed information about how to calculate the business use of home deduction, which is a very common one, and get the qualified business income deduction, check out the link in the description, where I'm going to be providing a lot more detail that's not going to be available on YouTube on how to claim these important deductions. Well, I hope you found that video helpful. By now, you should be able to prepare a basic Schedule C using FreeTaxUSA.com. As you noticed, there were some important and common deductions that weren't included in the scope of the video. If you want full access to more detailed video content about how to prepare your own tax return, as well as tax-saving tips for Amazon sellers, click the link in the description, and don't forget to like and subscribe to this channel because I'll be producing content like this on a regular basis. Thanks for watching.